Hey everyone, and welcome back to the show. Today, I'm so excited to announce our amazing guest, Chris Lavarek. Chris, thanks so much for being here.
Hey, thank you for having me. Good to be here.
Awesome. Well, we really appreciate your time. Now, Chris is the operations manager for Valkyrie Investment Group. He coordinates the management of the company, technical infrastructure, and daily ongoing operations needed to support the business. Chris is accountable for the development, management of Valkyrie team and implementing company systems to improve business efficiency. He works in tandem with the marketing and sales team to develop new and existing partner relationships and define and discover new investment opportunities. Awesome. Well, I can't wait to hear your story, Chris. Will you give us a picture of who you were before you started doing real estate and what drew you into the space?
Sure. Yeah, great. That's a great intro there. So, I got into space about 2018. Prior to that, I was and still am. I'm an IT engineer by trade, so I've been doing that by last 12 years. But before that, I was actually in the Air Force for 4 years. I was a firefighter, so completely different from IT. But then, 2018, I working away at IT cubicle, realized I wanted something else, a backup plan in case my 401k didn't go so well. So started looking at real estate. Why is everybody getting into real estate? A lot of the wealth is in real estate, and you see a lot of these really wealthy people in real estate. So me and my brother, made a goal and we bought a duplex in North Carolina. We actually bought two duplexes right off the bat, $209,000. They were really run down, 1940s. A lot of learning to do on that, and we learned a lot. But we partnered on that one. So we partnered with a private lender for that, and the rest was kind of history. We kind of knew we wanted to grow into partnerships on these deals. We knew you could do more with a team or partners, so that was our goal. Fast forward, it's 2021, and we have about 242 units. We just sold those two duplexes, actually, interesting enough. 3 years later, we sold them, and made a profit. So that was cool. And now we are doing what's called real estate syndication. We have a business, Valkyrie Investment Group. We partner with a lot more people now, both on the management side and on the investor side. And we buy big apartment complexes. We are working on a 384 unit in Florida right now, Daytona, Florida, set to close end of the month. So that's fun. I mean, we've accelerated a lot. It's been a big learning curve. Our company is a family business now. Our wives work in the company. It's a lot of fun. So
that is awesome, Chris. You've clearly done a tremendous amount in a relatively short period of time, 0 to 242 units. Let's try to break that down for our listeners. So many people are curious about, well, how did you do it? And we know you started with, the duplexes. Can you give us a little bit more color to that story? Like, for example, were they remote or were they local? And then, can you give us a picture of what you did from there?
Sure. Yeah. So they were remote. It's funny. I'm in Phoenix, Arizona, great market. For some reason, I felt intimidated by it in 2018, just a newbie, really. And I thought I could buy cheaper out of state. And you can typically. Phoenix is very competitive. I probably could have bought here, but I decided to buy in Durham, North Carolina. So bought two duplexes for $104,500. We bought them from a wholesaler, and they were pretty run down. Our goal was to do the BRRRR method. If you don't know that, that's just buying something, renovating it, filling it with tenants, refinance it with the bank, and try to pull out all your equity if you can. And so that was our goal. We didn't have much to work off of. We had some Roth IRA money, some cash reserves we were able to pull together for that. Like I said, we borrowed from a private lender. So we just gave someone a promissory note and they gave us some capital, and we gave them a deed of trust as well. That's a good one. A deed of trust is we're giving them kind of like a guarantee on the property, just as if they were a bank, that they can take that property. And that's how we did. We poured a bunch of renovations into it.
And Chris, let me just pause you for a sec. So how did you come to trust that wholesaler and just decide or meet that wholesaler and decide that it was going to be a good deal?
That is a great question. The first thing, if you're ever going to invest out of state, get a property manager or get a contractor or boots on the ground that you trust. And you can develop that trust by meeting them in a forum online or having multiple calls for a couple of months and developing that trust over time. That's what we did. We found a property manager, we found an agent, we established that relationship, and then we had them walk property with our contractors that we scheduled to meet them on site. So it was about having those network there for that property.
Okay, awesome.
Yeah.
So then you were renovating.
Renovating. Yep. We had to, there was one tenant, a couple tenants in there. But the interesting thing is when you start renovating a property, typically if they're pretty bad, which these were, those tenants were paying, somewhere around 400. We're going to raise rents to about 750. So those tenants typically leave. You don't necessarily have to force them out. So, we give them the option to move into a ready unit. But that's how that kind of went. So we didn't force anybody out. They moved into good units. And then we got other tenants for the newly renovated units. Then we refinanced it. We pulled out 100% our equity. So really cool to do that. All said and done, they appraised at 480. So that's 240,000 each duplex. So to go from 104,000 buying to 240,000 in value is pretty cool. Not so cool for the taxes, but it's pretty cool to achieve the idea we were trying to do.
Yeah, awesome. Okay, so and how did you settle on Durham? Like, I mean, obviously you were looking at market demographics and whatnot. Can you speak a little bit more about that?
Sure. Yeah. I mean, Raleigh and Charlotte are probably the two biggest cities in North Carolina. They get a lot of attention in real estate these days. Raleigh has a lot of tech boom. There's, Cisco and Red Hat. These big companies have some big foundations there. So a lot of people with money moving there. They call it the new Silicon Valley. Back then, I knew Amazon was looking at it in 2018 as their headquarters too. And I thought, man, I can buy in Durham, which is about 30 minutes northwest of Raleigh. So I was like, people just commute and Durham will blow up because Raleigh's blown up and all this. So that's what got me in there. Durham and Raleigh, they have great fundamentals, a lot of population growth, people moving down from the north. Durham alone has 3 universities. Everyone's heard of Duke. There's a lot of really good education in the area. So there's always people moving down there and need apartments as students and that kind of thing. So some good fundamentals there as far as population growth, employment, and just some big employers that are holding the area, both in Raleigh and Durham. So.
Awesome. Okay, well, thanks for giving us a little bit of a window into, your first deals, and you've obviously grown so much from there. What were some of your next? Let's just talk about your second deals. What did you do next?
So next, we tried to repeat the idea. We liked the duplexes. We went and bought 2 more duplexes within 6 months of refinancing that one. So that must have been 2019 now. We bought 2 duplexes. Same thing. We did the Burr approach. We refinanced our equity. Those ones, the market was already getting hot. I think we left in probably 5,000 in each duplex. We bought them 105,000 for the first, 110,000 for the second. A couple months later, that was mid 2019, and we renovated them. The value at the end of the day was about 190,000. So we pulled out most of our equity, left some in there. From there, we did a 5 unit, and we did that one almost 2 months later, same year, 2019. And then we went kind of fast.
Were you still using like the private lender for that, or how were you financing it at that point?
So yeah, the duplexes, since we pulled all our money out, we used the same private lender. The 5 unit, we used a different private lender. So just another person. And then we did a 13 unit and we used the same private lender as we did on the first duplexes. So we just kept building relationships with people. And hold on. Excuse me. So that's about it. We started making this network of people. We were doing 9-10% private loans, which is hard to beat in, when you're looking at a stock index fund, those are getting like 6 to 8. So
yeah, for sure.
Yeah. So that's kind of how it grew. We did a 13 unit, then we did a 16 unit. And then we went on, we did 84 unit. Excuse me. Something tickling my throat.
No
And then
worries.
we did a 120 unit, and now we're doing a 384. So
Awesome. Yeah, I think that's a really provides us a really great picture of the roadmap that you guys used. And so, I mean, 384 units. So let's just fast forward now to this 204 or the eight, I guess it was it 84 and then 384 or
yeah, we did an 84 unit in Columbus, Ohio, and
uh-huh.
then we did a 120 unit in right outside of Dallas, Greenville, Texas.
Mhm.
And then we did this 384 unit in Daytona, which we're still working on.
Okay, cool. Let's talk about Greenville. So how did you come across that deal?
Sure. So partners. Like I said, we built our foundation of our company on it. We had established a partnership with another syndication group out of Jersey earlier in that year. This would be 2020, early 2020. And over the next 6 to 7 months, we developed that relationship. And so we were able to close in November this 120 unit. So they actually, interesting enough, we flew to Columbus for another deal with them. That's how we got the 84 unit. This was probably April, May 2020. And we connected with them. We connected with their asset management team. That was Lighthouse Management Solutions. Great asset management team, property management team. And spoke with them. And basically what happened is they found a deal in Texas. And since we had already connected on this Columbus deal, they brought us in. We actually didn't do any of the underwriting. We didn't, we verified their underwriting and made sure that everything was crystal, but we didn't have to find the deal on that one. So it was very nice. Partnerships are huge if you can do it.
Yeah, that's awesome. Okay, so Chris, how have you leveraged partnerships, and can you speak to what has been so important about building partnerships and building teams in your process so far?
Sure. So yeah, like I said, every deal we did, we leveraged a partner in some way, whether it was a private lender or just a property management relationship. So we've just been big on it. We've realized kind of quickly when you do try to wear all the hats, you usually fail. And especially if they're out of state. Obviously, you need partners in that case. But I think one of the main things when people start real estate, they usually invest locally because they feel like, well, if something goes wrong, I can just go to the property and do it myself, And that kind of limits you in what you're going to do later on in your business or later on in real estate, because now you feel like you have to do everything all the time. When you invest out of state, you kind of already start that journey of understanding how big partners can play into scaling in real estate. And I think it's the number one thing you can do to grow in real estate. So for us, how we built it, if we were looking for a certain role or function that we couldn't do or we weren't good at, that's where we try to find that and leverage that. Our relationship with the other syndication groups started because we were kind of striking out finding deals. We had done a 16 unit ourselves, but after that, it was really hard to jump into like 50 units and 100 units. It was really competitive. So we partnered with a group that had deal flow. And there you go. Problem gets solved because you're able to use a partner for that type of area that you have a weakness or you're not able to do correctly. So,
And how were
um,
you partnering with them? Like, what roles was each group fulfilling?
yeah, definitely. So we started to tighten our business on the 16 unit. Our earliest syndication, we were doing everything from asset management to weekly calls with the property manager to funding the deal to deal acquisitions, financing the deal. When we went to the 84 unit, we became purely investor relationships, raising capital, our legal paperwork, distribution for our investor network, updates for our investor network. And so the asset management was handed off to a third partner, asset management team. And the lead partner, the sponsor, was really in charge of acquisitions, funding, financing. They were also funding it. But that made it incredibly better for us to deliver a better investor experience, a better relationship, really focus on one area of it. So that really helped our business to narrow down like that.
Awesome. So just going on that same topic, you guys have a family business, and how have you developed that business over time? I mean, you guys must have different strengths. Like how, and has it been, can you speak to some of the sort of challenges that have come with that, and also, what's worked well?
Sure. That's a great question. They say never work with family, right? Or never start a business with family. It's been a really cool experience, I have to say. When we started in 2018, I don't think we had as great a relationship as we have now. And the reason is because we've had to have weekly calls. We've had to have, calls for business, fix an issue. And that has like really caused us to all grow together and get stronger together. There's been a lot of times we clash. And it's just because we're different types of people. I found out my older brother, is more of a big visionary, and I'm more of like an integrator. So that's from the book Traction, but just means I'm more detail oriented and he's more big picture. So we had to kind of, figure out those roles and figure out who does the best in what area. And a big part of that is we've done these personality tests. I think I mentioned somewhere along the line, but we've worked with the DISC profile to define what people are good at and what they like doing. And that's been pretty fundamental to our business. So we have everyone in our business do that. We're a team of about 6 now. We were upwards of 9 at one point. And we have a couple different VA roles that are kind of temporary, or they don't do full roles, but we still, have about a six person team.
For sure. So I'm curious, for our listeners who aren't familiar with DISC, I am familiar with it, but for those who aren't, could you give us I mean, obviously you could talk at length about it, but a brief overview of the DISC profile, and maybe just what you are and what roles that lends itself to in your business?
Sure. Yeah. So DISC is something we found with the Tony Robbins website. It's been around for a while, though. It's not just his idea. And you have the D standing for, and you put me on the spot, but it's kind of like more the dominant person. They're more the person that would be in sales. They're more the person that all gas, no brake. They're just going to go after an idea before all the detail work is done. I is more of like an influencer. So they're better at the emotional piece of connecting with people, of networking with people, speaking with people. Relationship building is typically where an I will find themselves. And these are like high I's and stuff, but you kind of get the idea. S is more steadiness, I think they call it. And it's more, good with numbers and kind of like detail oriented. You want to get a focus on things before you commit. Conscientious is very similar to that. It's kind of more analyst. You're thinking things through. So the back two are more like detail and process systems, and the front two, DI, are more, I guess, relationship, people driven, big ideas, visionary. And so when you take a test like that, it'll tell you where you kind of fall along those 4 categories. And that can really help you to know what function or what role you could play in the team.
Okay, cool. So where did you fall, and then what roles does that lend itself to in your family business?
Definitely. Yeah. So I was a SC. I'm also an IT engineer, so it's very similar. A lot of IT would be probably SC, but it's typically in real estate, you'll find SC as in the person who's creating a lot of those backend systems or processes that you want to ensure you don't miss the next time around. So if someone's making a checklist on how they buy a property, that might fall on someone who's more analytical, detailed. They're going to put all those different pieces that we want to hit every time we close on a property. That would be in the SC category. I do a lot of that. So a lot of the IT stuff as well. So, how we build our systems, how we build the tech piece of it, how the website's, built, and what happens when someone, contacts us. Is it just shoot an email to us? What's the best way that we can get connected with someone reaching out? So it's about building those automations and those systems. That's a big area that I do, and where you'll commonly find those analytical type people.
For sure. Awesome. Well, thanks so much for sharing your story, Chris, and giving us an overview of the DISC profile and how that can be really useful for any of your teams that any of the listeners are working in. So please take a moment to give the listeners a way to get in contact with you, or anything else you'd like to share.
Awesome. Yeah, if you want to reach out, just go to our website, valkyriegroup.com, VALKER group.com. And you can contact us there. We got a lot of free resources. We got a passive investor's handbook. You can check that out. It's a free ebook. But yeah, a lot of podcasts, a lot of blogs on there. We're very active. You could contact us there. Otherwise, I'm active on Bigger Pockets. I am active on LinkedIn. You can reach out. You can type my name, Chris Lavarek, and just reach out. I'm happy to help any way I can. So.
Awesome. Okay. Well, I hope you guys go to Chris's website and check out his stuff. Thanks so much, Chris, for coming on. We'll see you next time.
Thank you.